7 dividend dates are sitting on the calendar over the next month, and while some are completely routine, one has more than tripled, and another carries a payout nobody is quite explaining yet. My job is to track what the broader market is saying before Iggy runs the forensic numbers. I went through these dates name by name, checking whether this year's number matches last year's story or whether something underneath has fundamentally shifted. Knowing when a dividend lands is simple enough, but working out what is driving that number is where the real value sits. Looking at the calendar, we have 7 distinct dates arriving between late July and late September. Sticking these dates in your diary is the easy part. Taking 5 minutes to understand what is actually sitting behind each figure on your statement is what determines whether that income is durable or a one-off event. Let us break down how each one was reviewed. To review these names, every company was checked individually against its own official SGX filings, comparing this year's payout against last year's story. Some of these figures land exactly as expected, but a few do not, and those quiet mismatches are usually where the most useful information is hiding. Let us start with an overview of the full lineup. Looking at the summary table across all 7 names, we see Singapore Airlines paying 22 cents ordinary plus 7 cents special on 11 August, while Singtel delivers 10.3 cents on 31 July. SIA Engineering pays 8.5 cents on 29 July, Cortina brings 14 cents special and 2 cents final on 4 August, Metro pays a flat 2 cents on 18 August, Bukit Sembawang brings 18 cents plus 4 cents on 20 August, and Boustead lands 4 cents final plus 4.5 cents special on 28 September. Let us dive into the first name on the list. Starting with Singapore Airlines, the upcoming payout consists of a 22-cent ordinary dividend alongside a 7-cent special dividend. That brings the full year total to 37 cents, compared to 40 cents in the previous year. On the surface, that looks like a decline, but the flying business actually achieved record revenue and operating profit. Last year's higher comparison simply included a one-off Vistara merger gain that was never going to repeat. Let us look closer at why this payout split matters. Looking at the 2 components for Singapore Airlines, both payments hit your bank account on the exact same date, but they tell 2 completely different stories about the future. The 22-cent ordinary dividend reflects the airline's regular recurring earning power. The 7-cent special dividend is strictly a decision about this year's surplus cash and carries no guarantee for next year. Understanding that distinction helps set realistic expectations for your portfolio income. If you have been tracking our earlier coverage on Temasek-linked holdings, this upcoming payout is simply the physical receipt arriving in your account. A dividend that arrives exactly as promised might not feel exciting, but it represents the exact kind of transparency and reliability you want to see from a major corporate disclosure. Next, let us turn to Singtel. Turning to Singtel, the upcoming 10.3 cent final payment completes an 18.5 cent total payout for the full year, making it the highest annual dividend Singtel has declared according to company filings. While that headline sounds impressive, roughly 5.1 cents of that total is funded by their asset recycling program rather than core mobile plans and broadband earnings. Let us unpack the core telecom earnings versus asset sales. Looking at Singtel's breakdown, approximately 13.4 cents comes from the core telecom operations, while 5.1 cents is generated by selling down capital assets. Management has been completely transparent about this capital recycling strategy, but an asset sales strategy naturally faces a mathematical limit when there are fewer assets left to sell. That brings us to a fundamental question for income-focused holders. When that 10.3 cent check lands, ask yourself how much of the payout comes from the monthly phone bill and how much comes from selling off the living room furniture. Both dollars spent identical in your bank account today, but only one of them reliably comes back next year. Anyone who has managed a tight household budget understands that difference instantly. Moving on, let us look at SIA Engineering. Looking at SIA Engineering, the dividend sits at 8.5 cents per share, representing a 2.61% yield. While it shares a brand name with its parent airline, the engineering business operates on its own earnings and independent maintenance schedules. Paying 2 weeks earlier on 29 July, it offers a quiet early signal on broader aviation sector health before the parent airline pays out. Let us examine how to view these two related stocks. It is easy to focus entirely on the headline parent company and overlook the smaller maintenance arm sitting right beside it. Because maintenance cycles and flight ticket sales do not move in perfect lockstep, tracking both side by side gives you a much clearer picture of the sector than treating either one as a total proxy for the other. Next, let us switch gears to Cortina. Turning to luxury watch retailer Cortina, the proposed 14-cent special plus 2-cent final dividend marks a return to their generous FY 2024 payout levels after a lighter FY 2025. Looking across multiple years of filings, Cortina shows a clear pattern of paying out handsomely during booming operational years and trimming back during quiet ones, rather than forcing artificial consistency. However, there is a recent market development worth noting. Cortina's stock price saw a 4.2% jump on the same day this dividend data was pulled, despite the dividend proposal having been formally announced weeks earlier on 13 July. There is no official company announcement connecting that sudden share price movement to the dividend itself. As a strict rule, we do not connect two separate data points that management has not connected in black and white filings. Now let us examine Metro. Looking at Metro, the company has declared a first and final dividend of exactly 2 cents per share for FY 2024, FY 2025, and now FY 2026. There is no special component, no growth narrative, and no complex story attached to the filing. In a market full of fluctuating payouts, this absolute flatline consistency is the narrative itself. Let me explain how to interpret that calculated yield. Metro's calculated 4.26% yield moves daily based on the stock market price, but the dividend check itself has remained fixed at 2 cents. Do not confuse a shifting yield percentage caused by stock price movement with a change in management's dividend payout. Much like a steady fixed deposit, a boring, predictable payout is not a flaw if stability is what your income portfolio is seeking. Now let us look at Bukit Sembawang. Turning to property developer Bukit Sembawang, this is the payout that requires the closest look. After paying a 4-cent final dividend for FY 2025, the FY 2026 payout jumps to 22 cents per share across two combined components, more than tripling year-on-year in official SGX filings. That massive jump is factually verified, but it raises an immediate analytical question. Let us look at what is missing from the disclosures. Property developers routinely experience lumpy earnings when major residential developments complete and hand over keys. A single project settlement can create a massive cash windfall that does not repeat the following year. Nothing in the published filing so far explicitly details the exact driver behind this tripling, leaving it as an open question whether this represents a temporary windfall or a structural shift. Here is how I frame that uncertainty. A dividend tripling overnight sounds like fantastic news, and it very well may be. But I treat sudden dividend surges the exact same way I would treat an unexpected one-off bonus at work. Wonderful to receive in your bank account, but never something you build your recurring annual budget around until you know where it came from. Now let us check Boustead Singapore. Looking at Boustead Singapore, the company proposed a 4-cent final ordinary dividend alongside a 4.5-cent special dividend. While the ordinary payout stayed completely flat year-on-year, the special component more than doubled from 2 cents to 4.5 cents. This payout is declared directly at the parent holding company level. Let us examine the broader pattern here. Boustead displays the exact same pattern as Bukit Sembawang, a sharply elevated special dividend without an explicit explanation tied to a specific asset disposal in the published release. Because Boustead's payment date lands furthest out on 28 September, shareholders have additional time for management to release further operational commentary. Seeing two separate companies show the same unexplained special dividend surge is a detail worth tracking side by side. Here is my observation on that coincidence. Spotting two companies with unexplained special dividend surges during the exact same reporting season might just be a pleasant coincidence. However, flagging those overlapping data points helps keep your eyes open for future earnings releases. Before we conclude the list, here's a quick note on how we maintain this independent channel. 0-day access on Substack and YouTube, full red zone watchlist, and institutional-grade cheat sheets for 9 Singapore dollars per month. If this breakdown has helped you evaluate portfolio risks, hitting the free subscribe button tells the algorithm that grounded SGX market coverage deserves visibility. Now let us summarize what to actually do with these 7 names. First, mark the ex-dividend and payment dates in your diary if you hold any of these 7 stocks. Second, ask whether each payout represents business as usual or an unexplained shift. Third, evaluate split payouts as 2 separate questions. What does the ordinary tell you about operational health, and what does the special tell you about one-off capital decisions? Let us review the specific categories. To group these 7 names clearly, Singapore Airlines, Singtel, Cortina, and Boustead all feature split payouts that must be evaluated individually. Metro represents complete stability with 3 identical years of 2-cent payouts. Meanwhile, Bukit Sembawang and Boustead present open questions regarding their sudden special dividend expansion that warrant ongoing attention. Let us look at the key takeaway. Out of these 7 names, 6 have their complete story laid out clearly within official filings, while 1 or 2 retain open questions. Always remember that the raw size of a dividend jump matters far less than the underlying operational reason driving it. Keep that principle in mind whenever a flashing dividend headline appears on your feed. To recap the first 4 names, Singapore Airlines delivered record revenues despite lower headline earnings due to non-recurring Vistara gains. Singtel hit a record 18.5-cent payout, though 5.1 cents stems from capital recycling. SIA Engineering offers a steady, independent payout acting as an early aviation signal. Cortina returned to generous FY 2024 levels, alongside an unexplained price move. Let us finish the summary with the remaining 3. Wrapping up the final 3 names, Metro remains rock solid at 2 cents for 3 consecutive years. Bukit Sembawang tripled its payout without detailed public commentary yet, while Boustead doubled its special dividend with a payment landing late in September. Tracking these payout mechanics ensures you never mistake temporary cash distributions for permanent business growth. 0-day access on Substack and YouTube, full red zone watch list, and institutional-grade cheat sheets for 9 Singapore dollars per month. Check the link in the description below to get complete access to Iggy's forensic tools and ongoing watchlist updates. Angela's content summarizes publicly available market news, analyst research, and earnings data for informational purposes. Iggy provides the investing Iguana's forensic ratings and analytical verdicts. Angela's role is to recap noteworthy developments across the SGX market without applying analytical filters or investment recommendations. Always read primary sources and consult a MAS-licensed financial advisor before making investment decisions. This content is produced for educational and informational purposes only. I am not a financial advisor. I am a retail investor who applies forensic analysis to my own portfolio and shares that process publicly. Nothing here constitutes a recommendation to buy, sell, or hold any security, and no specific target prices or personalized financial advice are offered. All data is sourced from public filings and verified sources. Where data is unverified, it is explicitly flagged. All investments carry risk, including the potential loss of principal, and past performance is not indicative of future results. If you are making investment decisions involving CPF, SRS, or personal capital, please conduct your own due diligence or consult a MAS-licensed financial advisor before committing funds.